There are three things. Here's the formula, TSA. You have to think differently from other people. You have to see and notice what other people don't, so you can take actions that other people won't. TSA, think, see, and act. And if you do those three things, you're going to put yourself on the track to being an advantage player. If you think like everybody else, you're going to get the same results as everybody else.
Good morning, good afternoon, or good night, depending on what part of the world you're visiting us. How are you? My name is Daniel Marcos, the host of the Learning Out podcast, and this is going to be a super fun podcast with my friend Joel Block. Hey, Joel, how are you?
Daniel, I'm doing great. Thank you, man. Thanks for having me.
So just a quick couple of lines about Joe. He has over 30 years experience in private equity and hedge funds, and he did over 30 syndicated transactions in real estate, venture capital, and hedge funds. He was the CEO of Bullseye Capital. I don't know if you still have that.
No, I just retired from running that fund here in the last year or so.
Okay, and now you're into education,
yeah,
and learning and development. All right.
Yeah.
So, but hey, let me go back. And as you guys could see, he has this mural on the back called the Advantage Player. And he was telling me the story about the Advantage Player on the back. So, Joel, you started as a poker player.
Blackjack
Player.
Yeah.
Right. So tell me the story of why you get to the Advantage Player name when you were playing blackjack.
So first of all, listen, the phrase advantage player comes straight from Las Vegas. It's what the casinos call people who can beat their unbeatable games like blackjack. And you're playing against the house. I mean, it's like the player, is playing. And I used to regularly take money out of those casinos. And so I was always referred to as an advantage player because I had a strategic advantage over the casinos. And that's really hard to do. It's something that's pretty remarkable. Now, anybody could learn, anybody could do it, and I could teach anybody in 5 minutes, but it takes a little more than that to master the skill.
But let me understand, did they still allow you to play?
Well, they don't like it. It's not illegal, but they don't like it. Because why? Because Las Vegas wasn't built by winners.
Of course.
Las Vegas was funded by people who lose money and leave it at the table. So they just don't like, people like me who can beat those unbeatable games. But there's a few of us out there that can. But here's the funny part, is that it's true that guys like me have taken millions of dollars out of casinos. But because of people like me, people like everybody who's listening in right now has left billions and billions of dollars at the casino because they believe it's possible to beat the game. But the truth is, you have to be really good to beat the game. I mean, I could make anybody a professional player, but they have to be willing to practice, do the work and the whole thing. And really very few people are willing to do the work. And that's true in life. And how many people are willing to work?
They have to do 10,000 hours of doing it.
Well, there you go. Well, it doesn't take 10,000 hours to master blackjack.
How many hours have you played blackjack?
Thousands and thousands. But not all. It took me about 3 solid months to get a really high level of mastery. And I'll tell you that, I learned it really fast and I've got a good memory and I was able to learn what I needed to learn pretty fast. And this was in the early 1980s before the MIT team that everybody's familiar with. I was then recruited onto one of the great teams in the sport of blackjack by a professional gambler in New Jersey. And so I was on his team. I used to work for his company and I was teaching, card counting to other people who were taking seminars. And so, that's kind of how I got started as a youngster. But the important part for our interview is that I started taking money out of the casinos in Las Vegas and I left and spent the rest of my life taking money out of that giant casino on Wall Street.
All right. Now let's go to the second casino. And by the way, this is called the Learning Out podcast, and we're going to talk about learning through life. Joel has had 4 lives, so we're going to talk about learning. But let's first understand the second life. What's the second life that you start taking money from Wall Street?
Well, so I was just a kid when I was playing cards. I was in college. I ended up finishing college. I stopped playing blackjack. I became a CPA. I worked at Price Waterhouse, the big accounting firm, and it really wasn't a good fit for me. I mean, it was very slow. It was too much detail. I was used to a lot of action and it just wasn't really for me. But the last account there that I worked on, and I worked on some really interesting ones. For example, one of my accounts, I did the tax return of the Attorney General of the United States. I mean, I did and I went to the guy's house. I mean, so really interesting things, when you work for a big firm, that's what happens.
Of course.
I also, in 1986, I counted ballots for the Academy Awards. So that was a fun assignment. Nice. But the last account that I worked on there was a giant real estate syndicator. And my job with an army of other guys was to convert the books and records of 500 partnerships into tax returns. And I just hated it. It was dreadful. I just
It was
wasn't
not to
for
push
me.
you out.
And I'm reading these partnership agreements and I'm thinking to myself, I don't want to be a tax doer. I want to be a deal maker like these guys. And so I quit the firm and met another guy, and we started a little company where we are syndicating real estate deals. So really a lot like what I was doing tax work for. We'd buy the property, we'd get some investors, and we would put a little deal together. And listen, we started very small, and over the next 4 years, I raised about $3 million, which for a beginner probably was pretty good. And and then we went out, and then, from there, I fell into a venture capital action where me and another guy invented the concept of delivering stock quotes to investors by fax. In 1990, we were using fax. And that may sound very silly now, and people always laugh. But I'll tell you what, I got an investor to put up $10 million for this deal. And, and then I went to Wall Street and I just sold this concept. So I got 35 of the biggest newspapers to run ads for our deal. And I got one of the giant brokers on Wall Street, Prudential Securities, in fact, who became Wachovia, which became Wells. And they bought, boatloads of these things and gave them out to their best customers as kind of a little specialty item.
So here's a point of coincidence. I built the first fintech in Mexico.
Oh, yeah?
The first one to put financial information online of the Mexican market, 1998.
98, huh? Yeah.
So you did it with faxes, I did it online.
Right, and we did it from about 92 to 95 or 90, give or take, just kind of when fax kind of burned out. Now, I had sold the company before it burned out. So I actually got out. Yeah, I got out right in time. And, let's talk about the lesson about that. Let's talk about the lesson of timing.
You're going to love the coincidence. We sold 2 days before the peak of the NASDAQ. We were doing around 10 million in revenue, and we sold the company for 753 million 2 days before the peak of the NASDAQ.
Well,
you just said.
Well, so people say, how did you know to sell? Well, listen, I was the one that was in the field. I was the one that was going to conferences. I could see that fax had kind of reached this peak, and then people were starting to be less interested in it. So when somebody said they wanted to buy it, I was a ready seller.
Yours.
And it wasn't my job to tell anybody what they needed to go research, because the information was out there for them to go talk to people and learn. But I was the insider. They weren't. And that really tells you something, that when you're buying or doing a transaction, you need to put yourself in the shoes of an insider. And, Daniel, these things are called advantage plays. The killer strategies, they're all advantage plays. And I've got hundreds of advantage plays for everything that I've ever done. And it wasn't just what I learned in blackjack. I took the lessons of blackjack and have applied them to every other part of my life. And I use that as the metaphor for everything that I do.
You've seen what they call now the advantage players in stock trading, U.S. senators. Now you could mimic the portfolio of a senator. There's platforms out there, and you said, I want to invest in this senator or congressman. Whatever the senator does in their account, they do with your money.
Well, here's the thing. You're not going to buy it at the same price as the senator. No, because the senator is probably going to get it at some reduced price.
That's correct.
So it's not exactly,
a couple of weeks before. Yes.
It's probably close, but it's not exactly the same return.
I agree. Right. So you went from playing blackjack to being an accountant. Then you figure out that you want to be on the transaction side. You went to the transaction side. How long were you doing transaction syndication?
Well, I did syndications for 4 years. Okay. And then I fell into the venture capital action. Okay. And I sold that company in 1996. Right. Maybe 95, 96. I forget which one. But
then I know you some years ago, you still had Bullseye Capital.
Yeah, I still have that. Yeah.
And how long did you work doing deals?
Well, I've been doing deals ever since. I mean, so I sold that company, the fax company, in 96. I bought a series of other companies and got involved in a lot of other deals. And then in 2009 or 10, started a hedge fund. And we started buying distressed real estate on the heels of the stock market, of the real estate crash in 2008.
So there's a YouTube influencer called Cody Sanchez. She lives here in Austin. And the other day she had a video post that she said, if you want to be a millionaire, the tool that has made more millionaires in the US is real estate. But if you want to be a billionaire, you have to go into private equity. And she explains that the market for real estate is so efficient that the margins of buy and sell are very small. In the private equity world. The margins, the spreads are really, really high. So can you confirm that, or is that what you did?
You know what? I don't agree with a lot of what you just said. Let
Why not?
me clarify a few things.
Please.
I think it's true that millionaires are made in real estate, billionaires are made in the markets, the stock markets, which is private equity. Well, and it's not just private equity, by the way, it's public equities too. So it's the people who buy Facebook at 10 cents. By the time you buy it at $45 and you buy it retail, that's the difference between, you need to understand the difference between retail and wholesale investors. Wholesale investors, which are like senators, by the way, they're buying it at a very, very low price, like maybe on issue. When they're just issuing or IPO,
or if there's a new rule,
or way before, they're buying it when it's still private, before it ever goes public. So that part's true. The stock markets are tremendously efficient, but there's a lot of lift. You get a lot of this leverage in the stock market because a stock can go from 10 cents to $200. That doesn't happen in real estate. Real estate actually is a very inefficient marketplace because it has brokers, and brokers talk to each other on the phone. There's not really a centralized real estate market like the stock market. That's what makes it efficient.
Interesting.
But real estate does, but wait a second. Real estate does not go from 10 cents to $200. Real estate goes from $100 to $200, maybe $300. So you may make 2 or 3 or 4 or 5 times, which could be a lot of money. And the beauty of real estate is that you get some leverage because you got bank debt. But you're not going to get 100 to 1, 500 to 1, or some of the big numbers in the stock market.
But and talking about real estate, there's really several real estate markets. The residential is very efficient because you could go into realtor.com and everything. Well, almost. Or
it's
well, that's why you have all the flippers that you have today.
Let me put it like this. The stock market is considered to be a perfect market. Perfect means the most efficient. You know what? Well, that's what it's considered. Okay? And it's pretty efficient.
I hear you.
Everybody knows most everything pretty fast. I mean, there's a few people that have a head start. But in real estate, you really have to work hard to be in the middle to really learn. If you're an outsider, you're an outsider. So that's why I would tell you that real estate is a less efficient marketplace. Some people know a lot more than others, and that gives some people a tremendous advantage over other people.
All right. So just to close this, the advantage player has repeated. First, in playing back then, you were in one of the top 4. You were doing the accounting and for these really big people and transactions. When you learn how to do the syndication, and then went to the syndication, and also being an advantage player in syndication, help you make big spreads and make big money.
I think that we need to be advantage players in everything that we do. Absolutely everything. I mean, you need to be at the top of your game in everything that you do. And
where's the book? You have the book already?
We're working on it.
Come on. We have a book.
Hey, Daniel, let me tell you something. I'm too busy executing advantage plays to write a book. Maybe I'll get to the book here pretty soon.
All right. And then after that, now you went into learning and development. Now you do keynote speaking and train companies.
Yeah. So I spent a lot of years in venture capital doing deals and buying and selling things. And then I started a real estate hedge fund. We were buying, developing, transacting, doing different things. And I retired from that last year. And now I'm invited to speak at conferences because companies love the advantage player message. And here's what's fun about this. About the first 10 minutes of the speech, I kind of explained the concept of advantage play. You got to remember, it's not about blackjack. It's the metaphor for business, for success and business.
It's always had an edge.
But one of the things that I do that everybody loves is I'll say, hey, would you like to see how a professional card player takes money out of a casino? And of course, the audience is going crazy. And I actually teach them the system of how to count cards. And which is really fun. And then we do a little exercise and I show them 10 cards. And after the 9th card, I say, does everybody know what the 10th card is? And everybody in the audience knows because I just showed them the system. And that's how professional card players can predict what cards are coming next. And that's really what advantage play is. It's the art of winning. It's the art of knowing what's coming next. So then it becomes about the metaphor and really about using advantage plays in business and how to strategize. And, having been in the hedge fund business, I was surrounded by some of the smartest people in the world. And, it's a vicious business. There's a lot of money at stake. I did pretty good at it. And so, but then what happens frequently is that by the end of the session, whatever the session is, a lot of the people who own companies or are involved in whatever will come up to me and say, hey, we didn't realize that you're private equity. That's where you spent your life. Could we ask you a question? That's when we usually do a breakout or something for those people. Because once they catch on to the private equity part, then they're going like, how do we value our company? Or how do we think about this? Or, how does it work? In fact, if I have a minute for a quick story. So some guy raised his hand and he said, Mr. Block, we're having all these private equity companies call into our association. They want to buy our companies. And, normally it seems like the going price for companies is 6 or 7 times earnings, EBITDA, right? I said, that sounds pretty close. He goes, well, these companies are offering 12. He goes, are they stupid?
Oh,
And I said, look, I don't want to embarrass you here in front of all your friends because you got like 300 friends in the audience. I said, but the only sucker at the poker table is the guy who doesn't know he's a sucker. And if they're offering you 12, I'm going to tell you something. Here's the bad news. If they're offering 12, you're probably worth 20. And the reason that you're probably worth 20, think about this. Think about when Disney bought all that land in Orlando. They're going around, they're doing all this secret confidential stuff. And if the last guy would have known he was the last guy, he could have held out for millions or hundreds of millions of dollars and they would have paid. But he didn't know and he sold for pennies. So here's the lesson, where this podcast is about lessons. The lesson is, it's not about how great you are. It's about what a great fit you are for their full. And most people, they miss that. They're so busy thinking about themselves. They're not thinking about, why do they want to buy us? What is it about us that's interesting to them? And if you could figure out where you fit in their portfolio, then you can name your price.
So that's the part I learned from Annie Duke, the poker player.
Yeah.
The best players, they don't play with their hand. They play with the hand of the person they're playing against. And their job is to try to figure out what you have on your hand.
Yeah. I mean, you're reading the other person. And part of it is, it's not about how great you are. It's about what a great fit you are. And, and when you're selling your company, that's it. Or poker, the concept is similar. Blackjack's a totally different game than poker. But the concepts are very similar. And those are the advantage plays that you have to learn to execute in order to get to the top of your game.
So I've helped several of my clients sell their companies. And the typical valuation is the typical EBITDA, as you say. The other valuation method is what we call a strategic sale. And we've sold for strategic for billions and billions. And it was a perfect fit.
Well, that's right. When you're doing a strategic transaction, EBIT is not part of the formula. It's not, in fact, when I raised the 10 million for my fax company, that was a strategic investor. They didn't even care about the return. They just wanted to learn about electronics and the potential of an oncoming thing, which became the internet, because this company had intel that some telephonic thing was about to happen. And when we showed up with a telephonic thing, they wanted in.
To go in. Wow. Yeah. So that's exactly what happened to us when we had the fintech in Mexico. So we partnered with an Argentine and Brazilian, and we started operating all over Latin America. We had operation in 9 countries. And we had an investor, Santander Bank, is the 12th biggest bank in the world, Spanish bank. And the 13th biggest bank in the world is also from Spain, called BBVA. And BBVA Bank put a press release that they were going to do the biggest online trading platform in the world. And Santander said, I could not be left behind. How can I get up front? And the only platform with operation in 9 countries, Latin America, was us. So they called us and said, we don't care the price. We're going to buy you. And we said, we're not for sale. We have 50 million in the bank. We just finished our round of financing. And Santander said, you're not hearing me. I don't care. Give me a number. So we turned back to our investors and said, what's the minimum you will sell? And one said, if you pay me 2 times. The other one said, you pay me 3 times. And one guy said,
how about 10 times?
And he said, if you want to buy me, you have to pay me 5 times. And Santander said, good, 5 times, I'll pay everyone 5 times. And made it 5. So just to give you an idea, in December 1999, we were valued at 100 million and raised 53. In April, this is 4 months later, we sold it for 753, 5 times. Because indeed was Slim, Mexico's richest billionaire. And the guy,
you know what? And they want what they want. And that's the way capitalism works.
We're saying there's no option. You need to sell. And the guy said, okay, if you want to buy me 5 times. And Santander said 5 times. We're going to equal everyone at 5 times. That was it. So completely strategic transaction. And by the way, we made a huge mistake. The entrepreneurs were so blinded for the growth that we stayed with Santander. And then that ended up being worth nothing. Yeah. But in paper, it was a lot.
And there's a lesson there too. And the lesson for the listeners and for people who are doing these sort of things, you got to call people who know what they're doing. You got to hire people who've been down the path that you are now traveling.
Yes.
And it may be expensive, because I'm going to tell you something. Let's say that an hour, it doesn't even matter what it costs. It doesn't matter.
If someone has to tell me how to do the deal, I would have paid them $10,000 to $20,000 the hour. Easy.
Well, you know what? I mean, you got to take the advice from people who know what's about to happen to you. I can predict your future because I've been down that path. I know exactly what's going to happen. Down that path 100 times. I know exactly what's going to happen. I know what kind of tricks they're going to try to pull out from their sleeve. And if you don't know, then you're going to get blindsided.
The typical brain surgeon that is going to charge you $50,000 for a 15-minute operation. And I'm like, you're going to charge me $50,000 for 15 minutes? And the guy said, yes, but I'm not charging you for 15 minutes. I'm charging you for the 40 years of experience.
Yeah.
Nowhere to cut.
Yeah. Well, and let me tell you something, as important as that is, in a certain way, there's so many dollars at stake from what we're doing and what the entrepreneurs around us are doing that, money doesn't even matter. I mean, it sort of doesn't even matter.
So, Joel, to close the podcast, what are the 3 things you have to do to be an advantage player in anything you do in life?
I'll tell you, there are three things. TSA.
There are 3.
There are 3 things. Here's the formula, TSA. You have to think differently from other people.
Okay.
You have to see and notice what other people don't, so you can take actions that other people won't. TSA, think, see, and act. And if you do those 3 things, you're going to put yourself on the track to being an advantage player. If you think like everybody else, you're going to get the same results as everybody else. If you see and notice what everybody else misses, you're just out there, you don't notice, think about this. You got 7 people sitting at the blackjack table. Everybody sees exactly the same thing. 6 of the people don't know what time of the day it is, what day of the week it is. They might as well be sitting there in the dark. And you got 1 person at the table that knows so much about what's happening. They know what cards are coming next. So you don't tell me that that's how it is in companies, that 6 people are wandering around, looking at the ceiling, looking at the floor, and 1 person in that company is knocking down all the deals. Yes. What is it about that 1 person? They think differently than the rest. They see and notice what other people don't, and they take actions that other people won't. And every company needs to really populate its halls with advantage players. And that's what the Advantage Player Institute was designed to do. It's for large companies, and we have programs for smaller companies. But that's the mission of it, is to make companies the best they can, because America's a great place, and American companies are great companies, and we need to make them even better so we can compete in the world at the highest level we can.
Very cool. Joel, always a pleasure. Always a lot of fun. And I always like that you've lived a big life. You've been enjoying it in every step. So thank you for that. It just shares in your smile and how much you go through life. Great pleasure, amigo. Hey, where can they follow you? If they want to reach out to you, how can they follow you? Or reach out
I'm on all the social media platforms. I'm easy to find, Joel Block. And you can go to theadvantageplayer.com and look me up.
There you have it. Learning up. And by the way, something interesting. Joel had to relearn his life 4 or 5 times. I really believe that's a way of the future. In the past, you went to college and did the same thing of college for 40, 50 years or whatever until you retire. You had to reinvent yourself 4 or 5 times and be an advantage player 4 or 5 times to win in life. That's what's going to happen in the future. And it's going to continue to happen. All right. Joel, always a pleasure. Thank you.
Thank you.